This segment is sponsored by Strategic Wealth Designers. Most people plan for retirement the wrong way, but it's not their fault. So here to break down the basics of retirement planning the way it should have been explained all along is Thomas Riley, a senior financial advisor at Strategic Wealth Designers. Welcome back to Great Day Washington, Thomas.
Glad to be back. Thanks for having me.
Of course. Well, listen, the stock market inevitably bounces around, and coupled with interest rate uncertainty, how resilient are our retirement savings?
Yeah, I would say with interest rates being cut, typically that's a sign that it's going to help stimulate the economy, but the market's been really volatile this entire year. So I would say it really depends on what your goals are and where you're at in life right now. If you are younger, you can be more aggressive and you have time. But if you are closer to retirement or within 10 years, it can be a good idea to revisit what your portfolio looks like around your asset allocation to make sure if there are any dips along the way, you're not too exposed to a downturn of some sort.
So that's good advice for those kind of thinking about retirement right now.
Yes.
All right, well, what happens if someone retires right when the market takes a downturn? Can bad timing like that really derail a retirement plan? Because we've always been told the market comes back, right?
Yeah, so that's a really great question. I would say it definitely can have a huge impact on a retirement plan. If you looked at, a time frame between like 2000 and 2002, you had the dot-com bubble. The market fell nearly 40%. So for anyone thinking about retiring back then and they had everything in the market, it could definitely set back the retirement years or goals a few years there. So I would say anytime you're getting closer to retirement, like I mentioned before, is making sure that your risk in your portfolio lines up with where you want it to, especially with your life goals there.
That makes sense. All right, we've all heard of those people who say, I'm just going to keep my money in cash to avoid the market risk. Are there any hidden risks in playing it too safe when it comes to planning for retirement?
Yes, so that's another great question. There's definitely risk in playing it too safe there. The number one thing is inflation there. I always say that time in the market is better than timing the market. So if you're sitting in cash, it can be difficult to decide, when to deploy that cash or, when to sit on it too long. So I always say a good rule of thumb for most people is aiming to have, say, 6 to 12 months living expenses set aside in the bank. And then anything above and beyond that, really invest kind of for medium, short term, and long term goals there.
So 6 to 12 months. That is a good plan. And the idea here is that we have a plan. That's really helpful. All right.
That's
At
it.
the end of the day, we can't control interest rates or the stock market. So what can we do to feel more confident? And how do we get more education in times like these so our retirement goes the way we want it to?
Yeah, I would say, especially right now with everything going on in the world, there's a lot of uncertainty. So being more educated. If you're looking for more education, you can do a lot of that, on your own there, or you can also come to one of our classes at Georgetown or George Mason. We do a 2-night retirement course there. It's an open forum question. So if you have questions on your mind, you can sit down and ask me. But really, getting more educated, I would say, is the number one thing that can empower you to feel better about your retirement and confident there.
Thanks, Thomas. Every time I talk to you, I do have more questions in mind, so I might need to sign up myself. Thank you so much.
Perfect.
Yep. For more in-depth retirement education, visit retirementplanninguniversity.com to sign up for classes happening in the DMV every month.